All right, welcome to another episode of John McEntyre Money Show Live Prime Time. And I'm John McEntyre, in case you was wondering. but we we are like I was saying, I did a post on Facebook about going to back to prime time for a season because of schedule conflicts and everything. So I'm going to actually be on 9 o'clock Monday through Friday. 9 p.m. Monday through Friday. And so let's get into this. First of all, before I get started, also I want to thank everyone for the thoughts and prayers. I was a little bit under the weather last week. Had an allergic reaction that I hadn't had before, and so it was something new to me, and it was like draining, and I was couldn't be on camera. Now I probably could have did a science fiction show, but I couldn't do money. He wouldn't have taken it seriously with if I would have been on and everything because of the allergic reaction. But we're back. I want to thank everyone again for all of the thoughts and prayers and everything. And so we're going to get back into the swing of it. So you know how we do. We start off with some wallet wins. I received a lot of wallet wins. I have over a week's worth of wallet wins. So I just grabbed a few just to share, and then we'll do our question. Then we'll do the question of the day, and then you can be on your way. Yep, I'm back. So wallet win number one. I just paid off my Chase card. Now I'm on to paying off my Discover card. Yep, that's a big wallet win. Carrying, definitely don't want to carry those balances too long on your credit cards. Get into those high interest rates. So yeah, that is a big time wallet win. Um, I never say uh, don't invest because of the sake of time. You lose time. But one of the other best ways of investing is paying off high interest credit because you get that quick return. Say your credit card is 15%. You pay it off, you just gave yourself a 15% return, investing. So that's one way of actually increasing your net worth. So wallet win number two, I received a small inheritance and I paid off all debt but the house. Yeah, that's a serious wallet win. All debted but the house. Um, and that's a small inheritance. That's one of those I wouldn't exactly call it a small inheritance. I don't go by numbers with those types of situations. If I receive an inheritance and it pays off everything of mine but my house, that's a big inheritance. so so that's not a small inheritance. That's a big inheritance. I mean, I'm quite sure, they're happy knowing that their financial plan was probably accelerated by years, maybe decades, by doing something like that. So, yeah, that's not a small inheritance. Small inheritance, huge wallet win. Let's put it that way. Wallet win number three. I now have 6 months of living expenses saved. Was easy once I made up my mind and focused. Yep, that's very good input. I appreciate that for sharing. Um, it did take a lot of focus and intention to get up to 6 months. Living expenses. Uh, Most people, it's usually a chore. That first month, getting that first month is sort of the one. It's that main like that hump. You're starting off. Um, then the second and third, it takes a while, but by the time you get to the third one, then you've gotten into your habit and you see that it's working, and you get more motivated. But it still takes dedication and commitment to get to the 6 months. And usually, what we've seen with clients is once they've hit 6 months, um, then they start thinking, okay, well maybe I should shoot for 12. They set the goal and shoot for 12 because they've gone into that mode and just see just how beneficial it is to be in that situation. And so usually after 6 months, it's like just so easy for them to think. Other good things start to happen. I'm a big believer in that. When you're focused and committed with doing something, good things start to happen to accelerate. is me personally, I believe that it's just God blessing me, that He sees my intention, He knows that I'm focused, He sees my heart, and so He accelerates things for me. Called favorite factor. Some people they use other terms, but that's what I call it. That now you're really serious and you're committed and you're moving forward, and so good things start to happen for you to actually make your goals much easier to accomplish. So there we have it. We have three good wallet wins there. Paid off a Chase card. Now I'm on to the Discover. I received a small inheritance, paid off all debt but the house, and I now have 6 months of living expenses saved. It was easy once I made up my mind and focused. Three big wallet wins. And so I just want to remind everyone to share your wallet wins. Make sure you put the hashtag wallet win in front of it, because the wallet wins, these are the small actions. As you can tell, I'm really not going to teach anything new. One of my mentors said, sometimes we don't need to be taught anything new. We just need to be reminded of what we know. And we need to keep being reminded until it like sticks or whatever. And so it's just a reminder. The wallet wins are those small wins that add up to the big success. It's like the one step at a time. Um, in paying off debt, they call one form of paying off debt the debt snowball. Wallet wins are the same concept. You're doing one taking one action at a time, and then over time the momentum builds up. And then just think, uh, let's just say for instance you did one wallet win a week for a year. At the end of the year you have 52 wallet wins. Where would your financial life be? Where would your life be with 52 new wallet wins? You've taken 52 new actions for your financial future. Um, what if you said, okay, I'm going to do more than one a week? I mean, just really think about what that happened. So once you break it down into small chunks, it's not such a big thing, because most people think, I have to invest, I have to do an estate plan, I have to do this, I have to do that, and then it can be overwhelming, trying to plan out your entire life. Whereas if you take it from one wallet win to the next, it doesn't seem like such a big chore. And you get your high yield savings account set up, you get your other account set up. Now all of that's taken care of, and then you set up the automatic payments, and that starts to happen. You get your insurance reviewed, you take care of your will. You just do one thing at a time, and just see the momentum that begins to add up, especially in like areas like saving. Just decide, each is going to be automatic 10% each week, or each paycheck, however you're paid or whatever. And then just watch it add up, and then the momentum kick in, and then all of them, they're all in place now, and they start to work together. And then that's when the what they call the serious compounding growth happens. So it's from these wallet wins. So share your wallet wins, because we want to celebrate them, because most people, they don't see it as being a big deal, because they would say, well, everyone's doing it. Everyone's not doing it. It just seems like it is, because sometimes you fall into the trap of comparing, and you think that you're the only one behind and things like that. No, America is in trillions of dollars of debt. Um, Credit card debts up into the hundreds of billions. And so you're not the only one. So we celebrate every wallet win, because we know if we celebrate and you keep moving forward, then some big things are going to start happening. So that's why I like to celebrate wallet wins. They're the small actions that equal big results. That's the way it is. So share those wallet wins. Hashtag wallet win. Share your questions. Uppercase Q. So if we see it in the chat, then I see it. I'll answer it. If you send the question, or if you have a comment, we'll see those. We'll make sure we try to um, catch those as the show goes on and everything. I'm getting better at that. People are interacting. And so I actually had someone to call me out on it. Hey, I interacted on the show and you didn't see it. Well, you sort of like did it when we ended the show. So I couldn't like come back on air and say, oh yeah, I want to give a shout out. Do it during the show. I was like, so were you watching the entire show? Oh yeah, I tuned in as soon as you started. Okay, well, why didn't you like do the comment as soon as whatever? Okay, well, I'll get better. I was like, oh yeah, we all have to do better. So that's what we'll do. So share your questions and comments and your wallet wins. All right, let's get into this question. It was posed over Facebook to me, and it had me thinking. Um, I was just going to just answer the question, but just give my blunt, my blunt, quick answer. But then I really thought about it. No, I understand what they're trying to do, but there's other things that should be done instead of doing, this particular question. And the question is basically asking. Should it was parents asking whether they should have life insurance on the kids, and the little kids. You probably see the insurance commercials, the Gerber baby and all of this, little. My answer is quick short answer: no, unnecessary. um, there's better things you can do with that money, considering the fact you've taken taking care of other areas of your financial situation. You have your investment, your retirement plan in place, and you're contributing to your IRA, 401k, 403b, whatever you have. You're contributing to that to set yourself up for when you go into retirement, so that you can make that happen. Um, the major debt is out of the way, like the credit card debt, things like that. Consumer debt is taken care of. Instead of buying life insurance, start a college plan, the college fund. Um, I heard one advisor. I heard one advisor. He was like, "This most morbid thing." He said, "This most grimy, cheesy." I mean, he used all the big words. He was just disgusted by parents who have um, uh, life insurance policies on their kids, and they're like, well, if something does happen, we could pay for the funeral and all of that. And he was like, from what I've seen, he was like, I've been an advisor for a long time. He said, I've advised wealthy people, I've advised not so wealthy people. A child passes away, the last thing you should worry about is their funeral costs, because so many people are going to come together to take care of that. They said, now when it happens to adults, some people are like, well, why didn't they just have life insurance? It's just part of being an adult. Well, a child, most of the time, the funeral is not nearly as expensive. It can be sometimes 70% less, something like that. So it's just a few $1,000s, and everyone, the community will come around children, because that hits most people. The average adult has a child or two, and so it hits them at deep places, and they just want to be part of. You know, they don't want parents to be mourning by themselves. So that's one of the quickest ways. In the past few years, we've had that close to happen close to us. A couple of times, Bella's swim mates. She lost a couple of swim mates tragically. You know, 10 years old, 11 years old, and I mean, community, like people just came from all over. People you didn't even think knew about it. The contributions. So much contributions came in that they started foundations and things like that to help other kids, giving it to the hospitals to help other kids in need and things like that. So I've seen that happen time and time again with kids. What I don't see more of, that should be happening more often than not, are the college plans, the college funds. So instead of paying $200 a month for a life insurance policy for a child, what if you put $200 a month in a 529 plan for the child? And with a 529, you have to choose the investments and things like that, because that's a long term type process. So I actually have a scenario, because most of the time with 529s, I favor index funds, because index funds, and now we have a lot of history with them now. The past 20 years, the average index fund S&P 500 has returned 10% a year for the last 20 years, 2003 to 2023. it has returned 10%. So let's just be a little bit more conservative and say it's returning 8%. You chose the funds to go inside of that, and this over here, these parents chose to go that route, 529. These parents decided to get a life insurance policy for their kids, both of 18 years. The children are young, just starting out, and they're buying it. Okay. Most of the time, the most you can buy for a child life insurance policy is up to 50,000. So, and it's going to be a good policy. It's going to be his whole life. So it's going to be around $200 a month. They just say you're contributing that. Okay, and this family decides they're going to do the 529. At the end of 18 years, this family over here, 8% return year on year, or some years it wasn't not, some years it was much higher, but it averaged 8% over a year. $110,000 they have in a college fund, 529. Over here, cash value 48,000. So you tell me, which is the better investment? Anyone that has an ounce of sense is going to say, okay, yeah, the 529. Yeah, it's just that serious, just that simple. So you see, you're getting more for your money. Over here, something does happen to the child. Okay, you have insurance, you have other things in place, you have emergency funds, things like that. You should be able to take care of that, and then you have an actual college fund in place that can be passed on to another child, family member, or you can, certain ones will allow you to use it for your own education. You could use it to go back to school if need be, to increase your skills, get another degree, whatever, for work. But which one is the better investment? It's the actual college fund, and you're taking care of college because that ends up sometimes being one of your largest expenses. There's some people out there, well, more than you would think. Their actual student loans are more than the actual cost of their home. There's some people out there, and I'm talking about nice homes, and they have that much. So would you want to give your child a policy, an insurance policy at 18, or would you want to say we have college cover if you don't get a full scholarship? So you have this money. Now let's find as much money as possible, but you do have money to start out with. You will not have to start using loans right out the gate. Better investment. I think they would be more appreciative of that, because if you give them the insurance policy, probably the first thing they would do is go cash it out. They'll definitely go cash it out. Personal story, my mom she did it. We were all young. She did a little policy on each one of us. But as when she and I, we talked about it, she was like, well, no one was talking to us about investing and all of this type of stuff, money management. No one was talking about that. They were just saying, and plus the neighborhood I was born into and grew up, death happened quite often, you know. Um, so that was her thing. She had had she had lost siblings like very young, in her past, and had family members that had passed, very young and everything. So she just wanted, that was just her way of showing that she cared and she was thinking about our future, you know, and passed it on. Uh, but after she and I, we talked about it. She was like, if someone had been talking to me like this, I would have definitely went this route. I would have done, I would have gone the college funding route, or, another way. Maybe just save the money and gave it to you to help you get started or something like that. So her intentions was right. She just did the best she could in the moment, which was fine. Well, today we know better. We have other options. And so there are better options out there, much better options. College fund or life insurance policy. So that's my answer. I would take the money and just start a um, college fund, 529 college fund, or Coverdale, one of the two. So there we go. Or if anything, basic, just a brokerage account with the index. Even that's the least I would do with it. Just set up a separate brokerage account. It don't even have to be a college fund, but $200 a month going into an solid index fund, 8% a year, 8 to 10%, over 100,000 when they start out at 18 years old. Not bad, not bad at all to start off with. So there's my answer, and that actually goes along with um, September. September is National Insurance Month. Um, statistic shows over 102 million adults are either in need of life insurance or they need more. That's one of the big stats, and that's huge. There's a lot of none and underinsured Americans out there, especially with insurance being so economical. Better word, so cheap. um, we've had quite a few people that says, I mean, I didn't realize how cheap it was. I mean, if I wanted to, I could easily just give up 2 cups of coffee a week and pay for my insurance policy every month. Just skipping 2 cups of coffee, or one lunch a week would pay for it. Things like that. It's just that simple how economic it is. And so that's something you want to look into. I'm definitely going to talk about it. I will always talk about life insurance, because it was never one of those things where I was anti life insurance. I just never thought about it till, you get older and you get wiser and you start thinking and realizing, hey, people depend on me. If I pass away, I would want my family to, to not have to, you know, live a certain way, downsize lifestyle, things like that. And now I know the importance of it and just how important it is as you move through life, how important life insurance is, even up until, retirement, when it's time to pass on legacies to other family members. Life insurance is one of the best ways to do it, because they receive the money tax free. So that's one of the best ways to pass on a legacy to your to your future, the grandkids, the kids, grandkids, family members. So yeah, so I'll always talk about life insurance and the other insurances, just all insurances, period. You're insuring your home, you insure your cars, you insure your gadgets, your computers, your other personal belongings, your phones, your watches, everything. Insure your life, insure your income, things like that. So I'll always talk about it. So with that being said, before I go, that brings me to the question of the day, which is, when is the last time you did an insurance review? Basic question. If you're having to ponder, if you've said, let me think, it's time to get in touch with us or an insurance professional to look over everything. You can contact us. You can go to johnmcintyre.com, contact us through the uh, through the website, or our information is at the bottom of the screen. We're doing more and more financial checkups and insurance reviews. Well, just financial checkups, period, because that's part of the financial checkup. Looking at insurance, we look at every area. And so, if it's time to sit down with someone you wanted to sit down, we can sit down and look over everything. Make sure you're on target to achieve your financial goals. All right. So that being said, I hope the information was valuable. If it was, share it, subscribe to the channel, let other people know, like us. Don't forget to hit that bell like. And until tomorrow, same prime time, 9 p.m., on same channels, Facebook Live, YouTube Live. We'll talk.